All right, everyone, thanks for coming down tonight. We got Jeff right here from Yodlee, and he's going to talk a little bit about the incubator and over at Yodlee and the application process and some of the details about it.
Right on. Thanks, Jeff. Thank you all for coming. So yeah, I'm not going to do a demo. I run an incubator, and my job is to find companies to apply to that incubator. So that's why I'm here. Summer, applications are open in the summer, and I go to meetups, and I meet folks and say, here's what we do, and if you have a startup or you know someone who has a startup that would want to apply, please do. So that's kind of why I'm here. First, how many people have heard of Yodlee? Yes, that's awesome. How many of you have heard of data aggregation? Financial data aggregation. More of you. Okay. So how many of you have heard of Mint? Everybody knows Mint. Okay. So Mint originally was built on Yodlee. Yodlee aggregates consumer and small business financial data. So you sign up for Mint, and they say, okay, give us all your bank accounts, your brokerage accounts, your credit cards. You type in your username and password. Mint goes in, it pulls all that data up, and it makes it available. So Mint was founded, built on Yodlee. It's no longer on Yodlee, it's actually on Intuit, but it's the perfect example of what Yodlee provides. Yodlee was founded in 1999. We invented financial aggregation. And in 1999, we're going to be a consumer-facing site where you could aggregate all your financial information. That didn't work out too well. So in 2001, we pivoted, sold our services to banks. B of A was our first customer and our big investor. Because you know what, if you're going to give financial advice to someone, you need to understand everything that they do financially. If you only have a picture of one of their bank accounts, they have a bunch of money in other accounts, whatever advice you give them is basically wrong. You need to understand all their debt, all their assets, money coming in and out. So Yodlee's vision, and we invented this, we have 78 patents now to show that we invented it, is pull all that information out, all consumer permission or small business permission, and make it available to our customers. At this point now, we have 600 bank customers, 600 non-bank customers, we have about $150 million in revenue. We went public in 2014. A year later, we were acquired by investment. And in 2014, coincidentally enough, we said, you know what? We want to start an incubator. We want to showcase all the cool things you can do with Yodlee data. Because in 2014, we were 15 years old. 15 years old in Silicon Valley is freaking ancient. Like, you running on abacuses? How do you do this if you're 15 years old? And we wanted to showcase, no, we are not running on abacuses. We are running in the cloud. We're actually a very early cloud company. And so we said, let's go out and find entrepreneurs doing really interesting things using financial data, make sure they use Yodlee's data, and give them the resources they need to accelerate their growth, bring them to market faster. So that's what we do, and that's what I do. I run the incubator. So I go out and I find entrepreneurs who want to do cool things with financial data and help them do those things. And we are class-based, so our program starts in December, ends in May. Applications are open in the summer. My summer is spent doing stuff like this, finding cool startups. Most of the applications are fintech, as you might imagine. That's why I'm at the Fintech meetup. It turns out if you are aggregating someone's bank and brokerage accounts, most of the things you're going to do with that information is fintech. Wealth management, lending, personal financial management, cash flow predictions, a lot of fintechy stuff. In our program, we also let in non-fintech companies. We think about insurance. If you are underwriting insurance, it might be useful to know someone's financial picture. It might be useful to know what they spend money on. Turns out if you spend a lot of money at Home Depot, maybe that relates to your homeowner's insurance premiums. Maybe it doesn't. I don't know. I'm hoping one of you wants to find that out, and we'll apply to our incubator, and we'll give you the data, and you'll figure it all out. So, although I'm at the Fintech meetup, it's not exclusively fintech. So that's kind of why I'm here. So let me describe the program to you. Again, it starts in December, ends in May. We give you 12 months free access to the Yodlee API, which depending on your user volume, is worth anywhere from $50,000 to $200,000. We give you dedicated technical support to implement that API. Over the 6 months of the program, you don't have to move to Silicon Valley, because if you have a wife or a husband or a kid or a mortgage, you know what you don't want to do? Move to Silicon Valley and live in some horrible flop house, which is all you can afford. That's terrible. You stay where you are. You work on your company. We bring you to Silicon Valley for 3 boot camps over the course of 6 months. Each boot camp is a week long. It's basically speakers, panels, workshops, sort of teach you startup 101, And then you come to Silicon Valley the fourth time for a demo day where you pitch to, last demo day, call it 60 VCs and 30 senior bank execs and some press. And then a bunch of hands-on like fruiters. And then in between the boot camps, each company gets assigned a one-to-one mentor, who's sort of a business coach. And then we have a roster of 50 subject matter experts who are available for office hours. So you're interested in how do we get more press? Turns out I know someone who runs a PR firm. She'll be available for a call. No, we're worried about scaling. Turns out that our VP of DevOps, who has scaled Yodlee to, I don't know, 18 shizzle bytes of data available with 5 nines reliability, we'll talk to you. So it's a pretty great program. We cover travel expenses to the boot camps. We provide no cash other than that. In return for all of that, we ask for no equity whatsoever. Nothing. Zero. You come in, we give you a ton of support, you graduate, you have to use Yodlee for the 12 months of your contract. After that, do whatever you want. And you're going, well, that's idiotic. How do you make money? It's a great question. We monetize by using the companies in the incubator as case studies. So again, we have 600 bank customers, 600 non-bank customers, lots of prospects. And they're always asking, what's cool, what's new, what can we do with Yodlee data? And our sales guys can take the incubator companies and say, well, these 2 kids built this in 6 months using Yodlee. You have 10,000 programmers on staff. Surely you can build something cool too. So that's how we monetize. Our sales guys go out and use the incubator as case studies. In addition, we've kind of built sort of an ecosystem, what I call the vortex of innovation, and everyone gets sucked into this vortex of innovation. You're all sucked into it because you're here right now. And I'm not even buying the drinks. So you're actually here for the innovation, not for booze that I'm paying for. More importantly, for folks in the startup world, you know who else gets sucked in? VCs and bank innovation executives. We have great startups. VCs want to meet the startups. Bank innovation people want to meet the startups. They all come in. If you're in fintech, generally speaking, you want to meet VCs. You also want to meet the head of innovation at Wells or at B of A or at JP Chase, all of whom I know who come to our events. So we sort of build this ecosystem of innovation, and we leverage that for companies in our incubator, as well as all of Yodlee's relationships. If you've been selling into banks and brokerage firms for 15 years, you know a few people. So that's really our program in a nutshell. It is very founder-friendly. People ask, well, should I do you guys or YC? And I say, why not do both? Give them the 7% and give me 0. All you have to give me is roughly 10 days of time, and you get a fair amount of value out of those 10 days of time. So we've done 3 classes so far. We started in October of 2014. Each class is 8 companies. So we've graduated 24 companies. Let's see, 2 have raised Series A, 2 have been acquired, 5 have gone into other fairly prestigious incubators, 4 have shut down. Overall, for a program we're building from scratch, it's a pretty good track record. So we're fairly pleased with that. I'm psyched to be here. We've had 2 companies out of LA, a company called Totem Wealth, started by ex-PIMCO people. So I'm going to assume that's South, so they're there. We had a company called Demuso out of Santa Monica, so I'm going to call that over there. I'm pretty confident they are going to raise a significant round this year. So overall, we get great companies. We've got a lot of investor interest, a lot of bank interest. And I'm here trying to meet entrepreneurs who want to do things with financial data. So with that, I'll take any questions you guys have. Yes?
Help me understand if you're not taking any equity, and the value that you're getting is that you're taking the case study and the idea and promoting it to other people, aren't we just sort of giving you the idea that's promoting to bigger resources that can develop the idea?
There is that risk. Yes, absolutely. B of A could say, wow, that is a great idea. We're just going to build that. But honestly, they don't. And the reality is, as much as we say, you have 30,000 programmers, you can build it, they can't, because they have 30,000 programmers, all of whom are working in COBOL and Fortran. So they can't really build these things. They're far more likely to partner with a startup or buy a startup. And honestly, if you get any success at all, they're going to find out about you whether you're in our program or not, and if they want to knock you off, they will. Generally, and I've been in Silicon Valley for a long-ass time now. If you're worried about big companies knocking you off, you're worried about the wrong thing. That's just not an issue with startups.
Oh, and also on F success, it
Yes.
says that you put $20,000 cash into the investment.
we say up to $20,000 cash, we cover your travel expenses to the boot camps. So the idea is, if you're in Silicon Valley, honestly, you get a little bit hosed because we cover your Uber to and from the boot camps. But if you're in LA or New York, or last year we actually had a company in Israel and one in Australia, those are pretty spendy flights. And so we cover those up to 20K. Other questions?
Who are the other 600 customers, non-banks? What industries?
Mostly fintech startups. So
Yodlee's customers.
Yodlee customers: Cabbage, Personal Capital, Venmo, PayPal, Google Wallet. I mean, obviously that was 5, so 595 others. Yes.
Tell us a little about the two companies in LA, just for example, and why Yodlee was the right API and where that went. I guess also sort of competitive, your API versus other similar.
That's a great question. So Totem, started by the PIMCO people, the idea was give financial advisors institutional level risk analysis. So they wanted to go to your basic financial advisor and say, we're gonna help you analyze the risk of your customers. And so they created a questionnaire that they would ask their customers, but then they wanted to build into it, what does this person actually hold? How much cash do they have coming in and out? What stocks do they already own? And use that to build a more holistic risk profile. So that's what they were using Yodlee for. Demuso out of Santa Monica is helping large apartment buildings manage their rent. So electronic payments and then lending to tenants. So they use our account verification API to verify that tenant X in fact controls this checking account that they're about to ACH $1,500 a month out of. And then they can look at that renter's spending and income as part of their credit decisioning to decide, oh, you can't make your rent on time, we want to give you a 5-day loan. Okay, we have that data. So those are just two use cases. As far as our data versus our competitors, who will just name Plaid, Quovo, Finicity, MX, Intuit's out of the business now, Morningstar, and then FIS and Pfizer. But they're not really in the game at all. On some level, we all have roughly the same data. Yodlee provides the long tail. Our competitors tend to focus on the 20 biggest banks. We have direct relationships now with 15,000 financial institutions around the world, where we are not screen scraping, we're actually going into their core databases, pulling the data out so it's more reliable, it's faster. We like to say that we have more people working on security than these startups have people. I'm not sure that's actually true anymore, but last year it was. So we have significant SLAs, long tail, security. We're audited by the OCC. We're audited by over 200 banks a year. If you have giant banks as your customer, generally speaking, your security is pretty good. Yes.
In terms of getting a more complete view of people's financial situation, do you go beyond the bank account into things like brokerage, mortgage, insurance, kind of a broader perspective?
Not so much insurance. So I always use myself as an example. I have a Wells Fargo checking account, I have a Wells Fargo mortgage, I have probably 5 different accounts at Charles Schwab, I have a Chase credit card, and I have an E-Trade 401k and a Fidelity 401k. And so Yodlee gets all of that, including positions in the Schwab account. So Personal Capital, who's a customer of ours, can basically look at my actual positions and say, dude, you're massively overweighted in technology, you're an idiot, which they do, and they send me that email pretty much every week, which is nice. Insurance, not so much. And then weird other random stuff. We actually have a bunch of frequent flyer programs and other things. When Yodlee was started back in '99, the original vision was actually to aggregate everything. Email, basically everything you had online. And so there's still some legacy of that, which is frequent flyer accounts. And at one point we had cellular bills and some other random things. And the reality is you can build a screen scraping agent pretty quickly. So when some customer says, hey, we want Credit Union Z out in Kansas, we'll build the screen scraper, we'll pull that data, and then if enough people start using that, then we'll go to Credit Union Z and say, we're scraping your site, we should develop a direct relationship, and then we go to 15,001 direct relationships.
So after the incubator, how much does Yodlee cost?
It varies a lot on how many users you have, and generally speaking, we have a little bit of a trade-off between monthly minimums and sort of per user pricing. If you're willing to step up to higher minimums, we'll reduce your volume-based pricing, and vice versa. You know, assume, call it 50 to 75 cents per user per month. So we are not typical API pricing where you get charged a fraction of a penny every time you hit the database. We are based on number of users. Once a user comes on for that month, they can come on every single day for the rest of the month. They're one user, and if they don't come on at all that month, they're not. What else? Question about the incubator? How awesome it is? How successful the companies have been?
What was the most successful?
So the most successful thus far, not surprisingly, is from our first cohort, because it turns out it takes time to be successful. A company called Roostify. They've raised a Series A round. They digitized the mortgage application process. They sell to a number of banks. They recently signed JP Chase, which is not a small bank.
Nice.
I was wondering if there's any qualities from companies that went through the incubator program. What are some of the pitfalls and maybe afterwards, or some qualities that made them very successful afterwards?
You know, so the companies that get the most out of the incubator are the sort of aggressive, scrappy companies. We have a lot of resources, and I don't have time to spoon feed those resources to the CEOs. And even if I did, I probably wouldn't, because there's a certain sorting mechanism that needs to happen. You need to learn to be aggressive. And generally speaking, outside the incubator, the best entrepreneurs and the best startups are scrappy and aggressive and sort of saying, there's a resource, I'm going to take advantage of that. And I'm going to call that guy, and if he doesn't call back, I'm going to call him again. And if you say, maybe I'll call that guy, if he doesn't return my call, he doesn't want to talk to me, that is not a quality that makes for a good entrepreneur, generally speaking.
Any other questions? Don't be shy.
So what level of ideas are coming into you? Are they like, functioning apps with, systems?
That is a great question. We are technically stage agnostic, and we skew earlier than probably any other incubator on earth. We will let in 2 entrepreneurs with an idea and a wireframe. We'll go as late as seed round, product in the marketplace, generating revenues, and some need to sort of revamp that product to build on Yodlee. Obviously, if you're not building on Yodlee, we are not going to let you in the program. That should go without saying, but surprisingly, actually doesn't. The sort of outer limit is, if you have enough money that you can become a Yodlee customer, I'm probably not going to let you in. If you raise a $10 million A round, just pay for the data. That being said, at the end of the 6 months at demo day, you need to have some MVP using Yodlee that we can show off to investors. So if you're those entrepreneurs with just a wireframe, I can have a lot of confidence that you can actually build a product in 6 months. So you need to have some track record of product building and coding that would give me that confidence. And the downside, honestly, of being stage agnostic is it's sometimes hard to find the right content. What's relevant to that super early stage company is potentially less relevant to someone who's been doing this for 3 years. But we're willing to sort of deal with that trade-off. Yes?
So tell us about a couple that didn't work, and what were the typical problems? They just didn't find a customer, or they couldn't develop what they were looking at, or what?
Well, one company, as an example, actually dropped out halfway through the program. They personally didn't have enough financial runway to last the 6 months. They ran out of money, and they had mortgages, and they needed to go get jobs. And honestly, that was our bad for not pushing on that question and sort of saying, can you really do this? You need to make a commitment to doing this for 6 months. We had another company that couldn't really reach product market fit. They sort of built the product, and customers didn't like it that much, and they were revamping it and not pivoting, but kind of iterating, and they just couldn't find a fit with the customers they thought made sense. And they weren't in a position to then do a full pivot into a whole different customer base, partly because they also had financial considerations. That is the downside of letting in the older entrepreneur. They're also more likely to have a mortgage and a kid, which means that their personal runway to do a startup is often limited.
What's the percentage of enterprise versus consumer ideas that come through?
Roughly 50-50. We don't aim for that. It's sort of what it works out to be. of those sort of B2C, one cohort generally pivots and becomes B2B2C because it turns out that B2C in fintech is incredibly hard. And people get into it and they realize that this is not working. You know what I can do? I can go to a bank which already has all the customers, but they don't have the ability to build this product. And that's a more efficient way to go. And I've actually seen more and more, entrepreneurs making that pivot as they're writing the business plan. Not, oh, I'm going to get out in the market and realize this is hard. They're writing the business plan, they're reading other people's Medium posts about what didn't work, and they're going, this is idiotic, I'm just going to sell it.
Anything else? Cool.
All right. Well, thank you all for being here. I'm going to be around for a while, so if you have questions. We have Yodlee stickers, which are pretty awesome over there. I have 3 8-gig memory sticks for the first 3 people to come talk to me and ask questions about the incubator. All right, thanks everybody.
Cool.
She wants the memories.
Cool. So that was Yodlee, Jeff Kane talking about the incubator program that they have there. Thanks a lot for stopping by. Till the next one.